Liquidity measures the ability of a company to meet its short-term obligations. In this video, I want to talk to you about current ratio, which is a simple financial health ratio and a powerful indicator of liquidity. In this occasion, we're going to learn using United Airlines and American Airlines current ratios. As an individual investor, you should avoid investing in risky companies. One type of risky companies are those companies that might be at some point unable or incapable of meeting their short-term debt or long-term debt obligations. If a company cannot pay back their suppliers, creditors, loans, etc., it might end up going under administration or bankruptcy. Current ratio, as you will see, focuses on the ability of a company to meet its short-term debt obligations, which are essentially liabilities that are due within 1 year. The formula for current ratio is the following. You take the current assets divided by the current liabilities for the time period that you're interested in. If the ratio is less than 1, that means that the company has more current liabilities than current assets. And that also means that the company might not be properly covered in case they run into unfavorable market conditions. Bear in mind that every time you're looking at ratios like this, you're effectively looking at a snapshot in time. So definitely, if today you find a current ratio that is very low, that is a flag. However, you still have to go back in time and see the trend of current ratios up until that point to see if the company actually is headed in the right direction or not from a liquidity standpoint. Most investors are comfortable with a current ratio of 1 or above. Benjamin Graham, in the Intelligent Investor book, actually recommends only considering companies with a current ratio of 2 or more. This means that you should only look at companies that can pay off their entire short-term liabilities and still have plenty of working capital left. With that, let's take a look quickly at American Airlines and United Airlines current ratios. I went ahead and calculated the current ratios for the last 3 years, but I left the one for the most recent fiscal quarter blank so that we can do it together. So for American Airlines first, to get to the assets and liabilities, we need to go to the financials. In fact, you will see here that, that current ratio is a financial health ratio already calculated for you. So it's 1.05 in this case, but let's do it from scratch. Let's go to the balance sheet. And if we go to details view, we're gonna go to the latest quarter. So let's go to quarterly, and then I'm going to collapse everything. All right, and then we're gonna go to Q2 2021, and if we go to the total current assets, we have 22.65, that's in billions, okay, 22.65, and then total current liabilities is 21.52 billions, and then we simply divide assets by liabilities, and there we go, we get 1.05 as we previously saw. Now let's do the same for United Airlines. Okay, we see that the current ratio for United Airlines is 1.37, so let's get into the balance sheet. We'll go to the last quarter. I'm gonna collapse everything. Okay, and then for Q2 2021, we have a total current assets of 24.67 billions, and then for total current liabilities, we have 18.06, And then for the current ratio, we have to divide again assets or current assets over current liabilities. And perfect, we got 1.37. Okay, now that we have the numbers, we can see that as of Q2 2021 for both American Airlines and United Airlines, actually the current ratio is not bad at all, it's above 1 for both companies. However, if we go back in time and let's assume that we had looked at the current ratio back in 2018, actually we could have seen a bit of a red flag there that both businesses were not properly covered in terms of short-term obligations back then. But like I said before, you have to look at the trend and see if the trend is positive for the current ratio. So if we go to 2019, then we see that actually for American Airlines, it got a little worse. Actually, the current ratio got a bit smaller, so still a yellow flag there. But we see that for United Airlines, actually the ratio increased a little bit. So we see that it's trending upwards, which is good. And then in 2020 is where actually we start to see a more significant change, where American Airlines actually jumps a little bit more in terms of current ratio, and we start to see a recovery or a much better financial health position in terms of short-term obligations. And for United Airlines, actually it already in 2020 it got past 1. So yeah, nothing to add there. It's just an overall good financial health in that regard. All right, that's it really. There's not much to it. Again, current ratio is a signal of financial health. It doesn't help too much with things like stock valuation, but it does help a lot in painting the big picture of the risk of a company that you're planning to invest in, especially in industries that are very assets heavy, like the aviation industry, retail, manufacturing, utilities, transportation, and others. With that, thank you so much guys for joining. If you liked the video, please give me a thumbs up. Any questions, comments, feedback, please leave those in the comments section below. Thanks again, and I'll see you in my next video.